All right, Joel. So great. Thanks for joining us. Hopefully we don't have any more technical difficulties. I know you're trying to find a good signal there, and hopefully we keep a good signal with you. But let's get started here today. Joel and I wanted to do this presentation because Joel's been in the business for 30 years. I've been in the business about 12 years or so, done about 300 transactions myself. Joel's, of course, done many transactions. Now, I'm on the investment end of the business. I've also fixed and flipped about 50 houses, done about 100 wholesales, but I focus on real estate syndication these days. And that means I pool capital together and I help people invest in New Jersey apartment buildings. We have an in-house property management company. And a lot of the people on the webinar today, I see are people from our group. Maybe you're part of our real estate networking group of over 4,500 members. We have an event coming up February 21st in Somerset. And of course, we do our weekly webinars here as well. By the way, next week, we have Victor Liu with a Clear Sky Title coming on. Very excited about that. But let's focus on what we're talking about today with Joel on here. We finally have a good internet connection, it looks like, with Joel, and we have his smiling face. And we just know, Joel, from all the hair on your head, that you have lots of years of experience in this business. Is that right?
So I started out in 1996, and it's been a hell of a journey, yes. A lot of great opportunities. We've met an amazing amount of people along the road. We, like many, got crushed in 08 through 10 and have battled back. You know, it was a difficult journey, but obviously well worth it. And I feel like we're in a much better place, you know, myself personally, just from the experience alone.
All right. So, yeah, well, I think you cut off at 30 years in the industry. 1996, I was doing the math. I was nine then. So you were starting to buy real estate, which is just incredible how time flies. I mean, yeah, to go back to that size, a little boy, you know, and, incredible. But how has the market changed since, you know, the late 90s to what we're seeing today?
Well, for a period of time, the competition was so minimal. You know, there wasn't HDTV yet. There wasn't go to a sheriff's sale and have 150 people. You know, when I first started, I'd go to a sheriff's sale. It was myself, you, your partner, Seth, and maybe two other people. And we could sort of divide and conquer together. It was very different. You know, nowadays, it's so competitive, it's almost ridiculous. And now more than ever, you know, learning and preparing so that you minimize your mistakes, the obvious ones especially. You know, I remember, you know, when you were 9, it's funny, but all kidding aside, a tenant called me one night. They were freezing. There was a furnace problem, and I didn't know what to do. So I ran to Home Depot and I bought a furnace. They told me that XYZ was the best, so I bought the best. And then I got it installed, and $8,000 later, I'd fixed their problem. I didn't know what to do. There was no place to learn from it. So I was kind of stuck, and I knew I just needed to fix the problem. That was my total focus. You know, years later, I'm still standing here, thank God, to be able to talk about that. But none of us would spend $8,000 on a single furnace. And I just didn't know any better. There was nobody to help me. But I think the mentorship programs, you know, finding good ones, finding good groups like yourself, you know, you're having a meetup on the 21st of February, going to events like that and finding like-minded people to learn from, share with, and grow with it is phenomenal. It's incredible to be able to help people along their journeys. And that has changed dramatically. Now, also the prices are obviously very different. I remember for, you know, speaking of New Jersey in particular, it was almost insulting when someone offered me a 3-family in Newark for over $100,000. Like, wait a minute, 100,000? Like, no, we're not spending 100. You're out of your mind. We'll bid you 85. So obviously that's changed dramatically. You know, the Patterson markets too, that you guys have had tremendous success in, you know, is a whole different world. And you see that, you know, one of the themes though, that we can pull away from Newark and Patterson, and also take a look at that around the country too. When you have these inner cities and they already have mass transit, nobody can really afford as a city to build new mass transit, but they can continually update their budgets to improve. And as you start to see that, you know that the trends are going to be changing there. And that gives you an opportunity to keep growing your business. And I think that's crucial as a simple way to look at things and keep figuring out where to go next. You know, I think that's an important aspect as you're looking at a more macro level for indicators.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Yeah, absolutely. Infrastructure in a city. We look at cities and we were like, wow, so in around like 2019, 2018, we were seeing what was happening in Newark, New Jersey. And I remember when we first started investing in Newark in like 2011, 2012, people were like, why would you ever invest in Newark? You're going to lose all your money, bro. You're an idiot. Newark's a terrible market to invest in. And I was like, no, this downtown area, they've really cleaned it up and it's really nice, and actually you can start to go out to dinner there and feel comfortable after dark. And, there's a sports stadium. You go catch a Devils game, it started to really have that infrastructure. And I was like, wait a minute, this also has a train station that allows you to get into Manhattan in about 30 minutes. You know what else has that? Hoboken. Look at Hoboken, New Jersey, right? That gets you to why is Hoboken at where it is and Jersey City doing what it's doing, but Newark is this like sour, ugly cousin that no one wants to touch. Like, I saw so much value in Newark. And bought a ton of real estate back in 2011, 2012, 13. I just wish I bought more. I really didn't have the resources to buy all that much just yet, right? I had to kind of learn the business, raise capital, and so on. But man, those deals are just worth so much more now. And then we saw the same thing happening in Patterson. We said, wait a minute, train station allows you to commute into Manhattan in 40 minutes or less, depending on the, if you get the express or so. And, but it definitely has high crime. It has gang problems, poor schools, but so does Newark. And Newark still has poor schools. Newark still has issues with crime, but there's sections in Newark that I would run down today and put the deposit down on. And there's other sections I wouldn't, but so you got to know your city well, but it's incredible. These inner city markets in New Jersey, you see the infrastructure in place and you think, well, what's the big difference between Hoboken and Newark? They both have train stations. They both allow for an easy commute to Manhattan. Hoboken schools aren't all that good either. So at the end of the day, we really saw that happening, and I knew it was going to happen. I saw the improvements in the cities, the property values growing. There was always naysayers. There's still naysayers, wouldn't invest in Newark right now, but there's far less people saying that now, right? And actually Newark's kind of on the map now as a place. And those 3 families we were getting for 85 grand are going for 585 now, which is just outrageous, Yeah.
Well, it's definitely a sign of the times. Things have changed dramatically. One of the things I just like to point out about what Aaron was just talking about, think about some of the things he said about how was you evaluating markets. It didn't cost him anything dollar-wise to do some of those evaluations other than his time, right? He was looking at and investigating the trends that were happening there. So what I was saying was, think about for a second what Aaron was saying. A lot of the items that he picked out didn't cost him anything to figure out. No dollars that he put out. He was looking at basics. He broke them down to the simplest formats and then watched the trends as they started to change. Mm-hmm. You can apply that in Newark. You can apply it in Patterson, but you can apply that across the country. Mm-hmm. A lot of people want to make this into rocket science. And sometimes, most of the time, it's just not.
Right.
And people will tend to overcomplicate and frustrate themselves. Mm-hmm. I mean, Aaron has created a lot of value for himself and his clientele by just doing some very, very simple things well and sticking to that and learning along the way to incorporate some new pieces to that evaluation process. But again, he's not spending hundreds of thousands of dollars in the learning mode. He is in time, that's true, but that's an investment in himself, for himself, and on behalf of his clientele to build the business. That's true. But I travel around the country and I see and meet Aaron in different cities. And the people are creating phenomenal wealth and long-term generational wealth, quarterly cash flow, building things that sticks and bricks where they can really get their arms around it. As you're an investor with Aaron's group,
Joel, you were just about to, I think, say how good People's Capital Group was, but you got cut out there. Unfortunately, we'll have to. Oh, hang on. We're getting a little piece of what you're saying here.
Is that
all right? Yep.
better now?
Better. There you go. There you go.
I was saying you're able to create tremendous value for your whole portfolio.
Yeah.
And the portfolio is people too, right? Your investor groups. And you're doing it with really simple, straightforward approach, being very transparent and honest with people, and evaluating the trends of what's happening all the time so you can bring value to the equation. I know a lot of people want to overcomplicate at times, but honestly, some of the magic is in keeping it simple.
Yeah.
And you can take that same type of approach and transplant it into other cities around the country, both big, medium sized, and even some smaller ones. You know, a lot of times we all tend to look at the NFL type cities that are so big, but then we go to the secondary markets where they have maybe a minor league team,
right?
Or they have a lot of fast food. I like to always, people know that I check out the fast food places, right? Because I'm looking at that to see that there's enough rental density population. Some of you may know that I've been in the commercial mortgage markets for a long time. And in the middle of the night, I would scan in leases and you could see where people were moving from. And people were moving from the 5 boroughs and moving into Newark and moving into Patterson and moving into Jersey City. And you could see the trend changing because they couldn't afford $5,000 in Brooklyn, but they surely could go for 16, 1,800 and then 19 and then 20 and 2,100 in these other cities. And it provided them the opportunity to move their families. And look, they weren't going to become to the single greatest school. That's true. But they gave the families a chance to stabilize their families financially and a chance to grow. And that was the most concern for them. And you were creating value at the same time, plugging into that. And we saw that time and time again, especially through the years 14 to 18, like you're describing. That was a big swing.
Yeah, absolutely. Well, I always found it was interesting. The way I got into real estate was through a lot of the guru stuff, and how easy it was going to be to buy apartment buildings and then put your feet up and collect the rent, and I was disappointed when I actually bought a 5-unit property and leased it up to a bunch of TRA tenants. And within 6 months, 4 out of 5 tenants were not paying rent in my building because I had leased it up to the wrong type of tenant. And, I quickly realized, I was like, oh, wait, those guys were selling me books and CDs, and they weren't actually, telling the truth about what this is. And it is a management intensive asset. It's not like owning a mutual fund or something like that. And that's the reason real estate syndications exist, that this whole process is very complicated, from underwriting the deal, knowing the brokers to even source the deal. The wholesalers are doing the direct mail marketing to landlords to even source the deal. And then once we finally underwrite it aggressively and get, turn over every rock as best we can, then the work really starts when we start, renovating the units and repositioning the building and leasing it up for top dollar. And, so I start doing this and I'm like, wow, this is really, am I doing something wrong? Am I stupid? And why did those guru guys tell me this would be so easy? And all I needed was their book and their CD and their coaching course, and I would be breezing through this. So why am I not breezing through this? And I realized they were selling me a coaching course. So, and that's fine. And not to say that everyone selling a coaching course is selling you a bag of goods, but perhaps the people I was talking to were. And I think what I've realized, a lot of them are, is, wow, this is a difficult industry. And the reason people in the 90s weren't at the auctions or bidding against you, and is because, it wasn't advertised like it is on HGTV, and it wasn't like the most popular thing to do like it is now. But also because a lot of people do try to do real estate. They do buy a duplex. And I just met someone yesterday who's like, I got a duplex, and I started dealing with tenants and toilets and just hated it, and hired a management company. And now, I'm starting to look into the syndication space because all the books I read said it'd be easy to be a landlord. And now it's actually pretty annoying, pretty tough. And so it's really a space that's necessary, to have syndication for passive investors. But there's also, a lot of active investors that want to take the plunge, and real estate is very accessible. You can call a realtor, you can find a deal. If you look hard enough, you can get the capital as well from BRRR loans. And that's one of the things that you've structured through the years, Joel. But you didn't start necessarily as a lender, right? You started as an investor.
Absolutely true. I was definitely an investor. And back in the day, let's say the middle 2000s, I was working on 2 houses on one street in Newark. And a couple people came over to me and asked me, hey, how are you able to do more than one at a time? And I sort of explained to them how I was borrowing some money at 14 and 4. I put in some of my own, borrowed the rest. And they were like, can you do it for me? And honestly, the first couple loans I did as a private lender were that simple. I put in 10 or 20% of my own money, got a few friends to put in the rest. We charged 14 and 4. People were happy with paying it. And, that's how it started. So very grassroots basics. But again, one of the mistakes that I personally made when I was expanding quickly, I bought over 100 properties in a 36-month period in the 2000s. So I was really growing quickly. But we tried to manage them ourselves while we were trying to grow the business.
Right.
We needed, not wanted, we needed someone like Aaron's group to have run that for us while we focused on the front end of buying the properties that we thought were good deals, and then having professional management to help us run them on a daily basis. Because as the person you just described with the tenants and toilets, the T&Ts, not everybody is great at everything. And I think in real estate, one of the things that everyone needs to understand quickly is to break down the deal, figure out what parts of the deal they really enjoy and are good at and want to focus their energies at, and then see how they can plug in the rest of the team. And if they can do that successfully, they can be very successful. But real estate's about $1, and it's not about you making 100 cents on the dollar. Most people want to do that at first, and they run into the wall.
Right.
As you understand and have a better appreciation for how important it is to have the whole team eating part of that dollar, such that you can keep being successful by growing it, then the light bulb will go off, the bell will ring, whatever you want to call it, but things will change dramatically for you in a positive way. Teaming up with groups like People's, syndicating, people grossly underestimate what goes into underwriting a deal. Right. I know it's a simple Excel spreadsheet when it's done. It looks that way. There's a lot of tweaks, ladies and gentlemen, that are going into that behind the scenes to make sure from local market trends that they're plugging into those numbers correctly, realistically, and honestly for themselves before they even bring it to you. Too many people too quickly want to expand. And thus, they make it sound simple, like Aaron is saying, or just talked about. And there's a course, and you buy the course and you think it's the magic fat pill. Well, the magic fat pill is the work. And these guys have put in the work for a decade, 12 years. I met them through Seth in particular early on. I met Aaron a little bit later. And these guys really did the groundwork, which was impressive, because I remember the days of 3 units and 4 units for them. And obviously now the business is significantly different, but they did the work to get there. It wasn't a magic pill jump overnight. So you're getting their experience to help you through syndication to be a passive investor, not deal with the toilets and the tenants on your side, leave the heavy lift to them, and being able to provide yourself with a very good return, short, medium, and then long term for the bigger play, the exits, those multipliers of your initial capital. But again, no one can do everything by themselves. It is never more apparent than in real estate.
Yeah, 100%. Yeah, absolutely. And I got to say, getting started as well, like with the first few fix and flips we've done, and a lot of the first few deals, I mean, still to even today, banks underwrite our properties, right? So people feel like I feel like lenders get a bad rap sometimes, I owe interest and points, but they're literally your partner in deals. A good lender like Joel here, he's going to be essentially, your partner in one way or another, because he's helping to underwrite the deal, first of all, because his company's not going to invest in a deal that doesn't make sense. No matter how good the borrower is, it has to be a deal that makes sense and has the right profit margins. And then, looking at the deal from so many fronts, you're taking a guy with 30 years of experience who's probably underwritten thousands of properties, made money in the business, lost money in the business, and he's going to underwrite your deal for free, essentially. And what a service, what an amazing service. And listen, if he says, no, it's not a good deal, don't do what I did when I was a rookie in this business and go to another lender who's less stringent and not as good at underwriting, who's going to give you the money, because they're just not as good a lender. I know BRR loans, you guys try to obviously make deals work and try to figure out ways to make a deal happen. But at the end of the day, underwriting is there to put the brakes on bad deals. And, I don't regret not buying a deal that maybe could have worked, right? I couldn't even name a property that like I didn't buy that now is, oh, I missed out on that one. Like everything I didn't buy is worth more money, sure. But what I can tell you are the deals I did buy that didn't work out. I could tell you all about that and make a few episodes, not like we had a bunch of losers, but over 300 transactions. Yeah, you're going to have a couple lessons learned, as we like to say. So the biggest lesson I learned was if your lender says it's not a good deal, find another deal. It's so important to work with your lender on that front. And so when you're going to Joel, like take advantage of that underwriting, bring deals to your lenders, get them under contract. Not every single, don't be sending them every single deal you get inbox, but it's such a great service. It really is.
We definitely do that. And today's Thursday. Tuesday, I had to do a really hard thing. We've been working with a new buyer. Mm-hmm. And she desperately wanted to get a deal done. And she put one under contract and showed it to me. Ironically, it was up in Newark. Mm-hmm. And it was a 3-family house. Price wasn't wrong necessarily, but the rental tenancy that was already in place was really wrong. She was going to buy into a situation where there's an eviction that, as everyone, not everyone, but a lot of people in the business know right now, is a very difficult process. It's been lengthened quite a bit. And then the other 2 tenants were far under market. And it's going to be very difficult to make those adjustments. And she was like, well, over the next 2-3 years, you're investing your hard-earned dollars, and you're asking us to put our money into the deal as well. It needs to work now, as well as grow over time successfully. And Aaron's point is really well taken. You probably can always find someone like me that'll make it work for you. But is that really helping you? I don't really think so. You end up with the same head of hair I do. And it ends up fast happening. And you don't want that. Yeah. I mean, we'll make some jokes and have some fun, but in the end, we have a fiduciary responsibility to tell you the truth. And if it makes no sense, we do need to tell you that. Generally, what happens is we don't do the deal. And after you're mad for 2-3 days, you're kind of thankful that someone told you the truth.
Yeah.
And then usually you refer a friend because we actually have the nerve to tell you the truth. So we believe in that model in the business. Yeah. I can Jimmy rig a deal for you as well as anybody after doing this for so long, but that's not providing you a service. That is not helping you. And we feel it's the wrong thing to do. So I agree with Aaron wholeheartedly. Look, the ones that we did that were the ones we shouldn't have done, believe me, we all remember those forever.
Yeah.
Those are nasty.
Absolutely.
They take the heart out of your chest.
Oh gosh, they really do. And you learn so much from them, and you try to always remember, never forget that deal, write it down your wall, put it on your whiteboard, get it tattooed on you. Never forget those lessons because you paid for those lessons. It's better than a book or CD or some guru's set of videos. It's really an incredible lesson when you lose a little money in the business. And luckily we haven't done that in a long time. So we've certainly learned from our mistakes there.
Tuition. Very expensive tuition.
Yes.
But
yes. Absolutely.
Anyone like Aaron or myself and other people around that tell you they've never lost on a deal, never had something go awry, please find someone else to work with. That person is just not being honest with you. If you've done 300 deals, 500 deals, 2,000 deals, and a few things didn't go wrong, you're lying. That's the truth. That's just real. It's real estate. There's humans involved. Our our fiduciary responsibility in the roles that we both play, Aaron and myself, is to help you avoid the obvious pitfalls, mitigate to the best of our ability the unforeseen, and do the best that we can quarterly, semi-annually, and annually to bring you the returns that we promised you that we would. And in doing so, the monthly or quarterly news updates so that you know what's going on, including the problems, are crucial to keeping and building that trust with you long term. So in our roles and in Aaron's roles, we can keep continuing to build our businesses by creating value, but it gets back to relationships and trust. We have to do the work. We start from that assumption. We know we have to do the work, but the harder part, I believe, is maintaining the relationships and continually building the trust by being honest with people. It's an imperfect world, the real estate world. It can be wildly successful. I got started because I read books and all these rich families owned real estate. So I thought, hey, you got to be like Mike. You got to own real estate. And like Aaron, I quickly ran into, hey, it isn't quite as easy as the person who's already a billionaire. And, you start to learn from there. You know, I told you the story of spending $8,000 on a furnace, a single furnace. I mean,
right. Yeah.
Disaster by any stretch, a disaster. and Aaron told you the story about not understanding his tenants really well in the beginning, what they really were. They weren't bad people, but the program they were part of didn't really fit what he was trying to accomplish long term.
Yeah.
He didn't really understand that quite yet. He learned the lesson quickly and hasn't repeated that. So that was a good lesson. The ones that we repeat are bad ones, obviously. Then we haven't learned anything.
Absolutely.
So, you know, if you're going to go the landlord route, you really need to understand what tenancy is to you. It's not just the rent payment. There's a lot of other pieces that go to it, and making sure that you're selecting well, wisely, and profitably. You know, that's really truthful, and it's not as easy as people think. And thus, again, you know, the syndication groups that are out there that are experienced and seasoned bring great value to the market to investors everywhere.
Oh yeah, it's really an incredible service, you know, and it's an interesting space now. There's a lot of other services out there, which makes sense because for so many years, right, people looked at real estate as just like kind of off limits. Well, you got to put on your hard hat to own real estate, you know, and then like REITs kind of started to develop in the early 2000s or so. But for the most part, the actual syndication space where you can, hey, here's a building, you can invest in this 123 Main Street. You're going to get this type of cash flow, this tax depreciation, this check upon the refinance or the sale. You know, that's kind of only about a 10-year-old space so much. You know, for many years, it was just buddies calling up other buddies and kind of, hey, let's get a deal done. You know, but now there's companies out there that are raising $150 million from people investing $50,000 or $100,000 and pulling together thousands of them. You know, it's really incredible. And just on another note too, I made sure my investors never lost money. So another good lesson learned from this was you lose money as an operator. You don't want to lose too much money, you'll be out of business, but you can learn lessons and make mistakes and take hits on projects. And as long as you're doing enough of them and you have more profitable projects than non-profitable, you can do well there. But I made sure my investors always got paid. So at the closing table, we'd actually write a check to make sure they earned a 12% annualized return on their investment. And, you know, yes, that would actually add to our losses. Not only would we make sure they got their full principal back, but also an actual 12% cash on cash annualized return on their investment. So it made our losses even harder and larger. But at the same time, the most important thing to us was making our investors happy. And luckily, we were in a position where we were moving enough deals and had enough income coming in. We were able to afford that extra hit, but it was so important to us. You know, what bothered me wasn't so much, hey, you know, we're gonna lose a little money here. It was like, man, I told these investors I was going to do something. It didn't work out as we had planned. We'd made some mistakes along the way. There were other factors as well we couldn't control, but for the most part, we hired the wrong people. It was our fault. And so we made sure to write that check to our investors. So you want to make sure to do that. And hey, you know what? If you don't have the money to pay your investors at that time, sign an IOU and pay them out over the next 6 months or whatever it is, you know, make it reasonable and fair for everyone. But that's how it's done. If you got to pay your investors, even if you lose money, because the second you lose money on a deal and your investors don't earn, you're going to lose those investors and your reputation, you know, is a shot. So we never do cash calls. You know, we never make sure if we don't hit the mark, we try to make good on the difference, of course. But those are really lessons learned years ago. And, you know, for the last 7 years or so, we've done quite well with our projects and been on target or better. So it's been a good run, a lot of lessons learned there. We made sure our investors always earned that return, you know.
You know, building that relationship and trust is what you're talking about, and putting your fiduciary responsibility of putting the investor first. That is what people are really looking for in syndication groups across the country. A lot of groups are very new to it. You know, we went to an event this past year where we met a lot, and I was surprised at how many quote gurus had only been doing it for 24 months. And to me, that doesn't actually make a guru. They haven't experienced the loss. They haven't been through, you know, tenant turnover to that level, or something going wrong with an unforeseen problem to a building. And you're basically investing in that experience. You're investing in the experience. You're investing in the trust that's been built with hundreds of people before you. So there's a lot of different referral points and references to be able to confirm for you that People's Capital Group not just stands by their product, but also supports the people that give them their trust. I can't stress enough how important that is. At a small individual firm like ourselves, where we're making one loan at a time, we're trying to provide that same type of service and trust with each person. Yeah. But Aaron is bringing in sometimes as many as 50 people on a deal, and that's a lot of responsibility he's taking on. Plus, he's running the operation. So they're earning their money for putting that together, which is rightful. But more importantly, for the long-term health of their business, creating that type of long-term relationship with people so that they're building the easiest referral base they could possibly ever have, and that is satisfied people.
Oh yeah, satisfied customer. Absolutely. Absolutely. Yeah, we do everything we can to really make an enjoyable process too. And that's the other thing, you want people to enjoy doing business with you, right? Because I'll think about service providers, or you might not be the best, attorney or the best landscaper, right? But like, as long as you do your job well enough, we enjoy doing business with you, that's the most important thing. So I try to do, these monthly networking events that are really engaging. We do it at a brewery, so you have a little fun there. Our investors are always welcome for free. We also do steak dinners about twice a year or so. That's really fun. That's like invite only at a, high-end steakhouse for our investors. And I just try to also go out to lunch with them maybe once a year and just kind of, get to know each other a little bit better, know their children's names and their spouses' names and what's going on in their life and so on, and maintain that relationship. What's incredible is about 50% of our capital for new opportunities comes from existing investors. Another 35% of our capital for new opportunities comes from referrals from existing investors. Only about 15% of our capital comes from new investors we meet, maybe from listening to the podcast or Googling us or things like that. Now, that's just our current fund right now. The could change a little bit for upcoming funds, but I really pride myself on that because I do get great feedback from our investors. We usually, over deliver, under promise. So we're sending them, checks that are larger than we said they would, or sooner than we said we would. So that tends to also make people very happy, of course. But, the monthly updates, quarterly financials, consistent webinars and educational things, the podcasts and so on. I think people really take advantage of that and enjoy it. And but these days, to run a good business, you have to have all those things in place, things that excite your customers and engage with them, a personal level, but then also whatever product or service you have has to be on point too. My buildings have to perform, my fund has to perform. In addition to all that's the most important. But it's it's really an interesting business. When you invest your money with someone, it is a personal decision. It's business. There's some numbers involved. We're talking about return on investment, but it's really a personal decision. And the reason people invest with us over maybe a firm that has, 20 times more, investors than us or so on is because it's personal. They like the local properties here. They like working with us. They know we have a good track record. We're transparent. They can talk to the owner of the company. That's a really nice thing. They can pick up the phone and get me on the phone. So it's about that personal touch, that I think people are looking for like more and more these days, right? As we get like further apart. It's interesting.
I think COVID has actually brought that more to the forefront, right? People want to truly do business, that they have relationships with people and touch them and can reach them. You mentioned, you went by the statistic quickly, but think about that for the people that are here listening today. 50% of all new capital comes from existing people that are already in, and another 15 or so percent comes from direct referrals to that. That's 65% of each deal is people who have already built trust with Aaron and say yes. I mean, that's a pretty damn good track record.
It's actually 35%. So yeah, it's actually 85%.
85%. Yeah. Sorry about that. Not many people can boast those types of ratios. And again, being locally based and really knowing the properties and markets that they're working in is definitely an edge to these giant funds that will never see the town, will never see the county, have never been in the court system there, have never been in the buildings there, have no personal relationship to the people that they're investing with. That doesn't mean BlackRock's not a great place to invest.
Right.
But there are a lot of alternatives for people that want to be able to feel that they're truly involved with the people that they're investing their money with and trust them, that they can access them, that they're, really being honest and transparent and know their markets well. And People's Capital Group does that fantastically here in New Jersey. Absolutely.
Thanks, Joel. I appreciate that, my friend. I appreciate it. All right, so let's change gears for a second here. We only have a little bit more time here. We'll try and wrap it up at noon here in about 7 minutes. So I did want to talk about just kind of where the market is and where we think it might be going, what our crystal ball says, which, by the way, our crystal balls are, sometimes right, sometimes wrong. You can have so many years in the business and still be wrong about what you're predicting. I remember talking to someone 5 years ago who had been in the business for 25 years, and he's like, sell all your real estate. It's falling tomorrow, and he was way off. But so on your end, though, you're on the bottom floor, you're getting loan applications, right? You're seeing borrowers. I'm sure business has slowed down a little bit, but are things still chugging along, or how's business these days?
So interestingly enough, yes, business definitely slowed down in July and the first week or two of August. That was the low point. Rates had spiked probably 200 basis points in a 3-week period, and everyone just took that. You could hear the sucking sound where people just didn't know what to do. You could hear the inhale in the chest type of thing. Mm-hmm. A lot of people stepped away for a few minutes, but then as numbers started to slow down, people also started to realize that nothing had really dramatically dropped in price. This was a change in the interest rate.
Right.
But rents had been changing dramatically as well, eating up a large chunk of that change in the interest rate. Mm-hmm. So we've seen pivots from around the country. That's true. Mm-hmm. As business has picked up from end of August through September, October, November, December, and now we're seeing pivots out of Florida and Texas to, yes, maybe states that aren't as glamorous as those two in particular, or Idaho, which no one has really found till Boise went on fire from 18 to 20, early 22. And it appreciated well over 100%. And Seattle, Washington had gone crazy, and Portland, Oregon, et cetera. And now those old places are becoming hot again. Mm-hmm. Michigan, Ohio, Oklahoma, Missouri, Louisiana, Alabama. The Carolinas are still really strong. Mm-hmm. Parts of Virginia, outstanding still. Mm-hmm. Connecticut, right in our own neighborhood. Right. Pennsylvania, still in everyone's top 10.
Right.
New York, New Jersey, people still find deals. Not as frequent, that's true. Yeah. That is true, but not as frequently, but they're still finding deals. Mm-hmm. So we're seeing some pivots. We had done a bunch of deals in the Pacific Northwest. That has slowed down. We just closed in Seattle, I think the last day or two of the year. But we're seeing more activity right up in the heartland of America. Those numbers, we still model, obviously, and we do some stress tests on the interest rates. A lot of those places still work at 10%. I know the 10% number sounds incredible, but if you're modeling and giving a loan out at 7.25%, 7%, and it still cash flows at 9 and 10, then you're in great shape, right? I know that's not as hot or cool as maybe building out a new lot in Cape Coral, Florida, or finding something in Miami, because those towns and areas might be a little cooler, but it's all about making money, and people are finding niches all across the country, in the Cleveland, Ohio's, the Detroit, Michigans, Tulsa, Oklahoma's, Kansas City, Missouri's, St. Louis, Missouri's, and it's a lot different. Little less risk on each individual deal. That's true for them, which is good. Mm-hmm. But the cash flow is working. Well, that's what we're seeing going on, and business is starting to net grow again, which is good. Mm-hmm.
Yeah, we've seen kind of a pickup a little bit in demand. I don't think rental prices have gone down in the last 6 months. I think if anything, they've actually grown a small amount. But it's not like we're having trouble leasing our units, or, the biggest challenge we have is finding a good deal. We really haven't seen prices come down at all. And it's very frustrating. And then there is still a huge demand to buy real estate. So because of that, sellers don't really need to drop their prices all that much. Maybe instead of 25 bids on their property, they have 4 now, but you still have 4 bids on your property. You're still going to sell it somewhere around list price, and then if it's really well priced and you don't get in there quick enough, forget it, right? There's still that hot demand for low priced, fixer uppers, value add real estate. I mean, the deal we snagged right now, the only reason we got it is because the broker called us up and said, hey, perfect deal, family owned for 40 years, really clean property, rents way below market value by 35%, great location in Bayonne, New Jersey, but I need to put it on the market, in a day or two. So you have 24 hours to react. Here's the price we need to make it happen. we hemmed and we hawed, try to get it for less, but realized, hey, this is a good deal for a good price. Let's go forward on it. I think our investors will love it. And they have. So it's been a really big hit there. But you got to move on the deals when you find them, and you got to move quick too. And, we were actually looking at another deal at the time, and we were about to move on that pretty aggressively. We actually had started putting some capital together for it. But then we went into our next level of due diligence, and we saw a bunch of red flags. Collections were just dropping off like a stone. The management company just lost interest in the property. The partners kind of fell apart. They had their own management system that fell apart. And by the time we're completing our due diligence period, we're like, this thing's a mess. Nothing's getting fixed anymore. No one's collecting rent anymore. What was a decently turnkey building, because keep in mind, it's got to qualify for a mortgage, right? At the end of the day, we get a mortgage for 70% of the purchase price. So it's got to qualify for mortgage. It has to have some money coming in, even though rents are low on the buildings we buy and collections can be weak sometimes. It can't be like 50%, with all the pipes leaking and everything. And if it is, that's got to be priced into the deal. Now we need a huge discount. So, went back to the seller, asked for a huge discount. He didn't give it. So at the same time, we found this next deal and we pivoted very quickly to the next deal. We had to move on it quickly. It was a high demand opportunity. We had to jump on it first and foremost. We were able to get our LOI, our letter of intent, signed before it was ever put on the market. And it never hit the market. It was an off market transaction. And that's how a lot of these are done. That's it. And those are the types of deals we're snagging right now. That's how we're getting it done. We also do direct mail marketing to owners as well. But the bottom line is, it's really hard to find a deal right now. Luckily, our investors are excited about this one. We found a great deal here as well. We're moving on it here in the next few weeks or so. We're closing on the transaction, and it's always an exciting time right now. So, it's been a really good experience, but we're looking here at 2023. We are pulling together a lot more capital. We want to have a war chest ready to go. We want to snag hopefully one more good deal this year. We try to buy 2 apartment buildings a year. So if you're one of our investors on our list, keep an eye out, hopefully for more deals to come. And if you're still looking to put capital to work, let's connect possibly about this deal we're working on right now. Although it is on the finish line right now, we're getting to the end. We can still talk about different ways to participate in different opportunities. So, really an interesting time in the market. Rates are kind of ticking up a little more and then expected to come down towards the end of the year. That's still looking likely. Inflation's ugly head is kind of reared, but now, tapped down a little bit. Gas is still low. That's kind of a leading indicator of inflation as well. So for the most part, we're looking at probably rates starting to tick back down early 2024. I've heard some educated people say late 2023 as well. Who the heck knows, of course, but I think this big, scary, world-ending recession, I don't see it really happening. Do you?
I think one interesting thing from all my time in real estate and actually being a trader on Wall Street, when cycles end, there's usually tremendous leverage that's out there. And right now, there's still tremendous capital available. Yes, it's become a little bit more choosy. That's true. But people are not levered up to the point where they cannot participate or execute. I'm not used to seeing that when a market changes dramatically. I think we're going through a change period. Yes, that's true. To your point, not necessarily 30 bids on every deal, now 1 to 5, or maybe 1 or 2. That's true. Still healthy though.
Yeah.
And people are paying, one of the things they're paying your group to do, and people like ourselves when we're helping, paying for understanding how to source deals. That is not something that you learn in an hour. You can't read the book on a boot camp weekend and be good at that. Yeah. It doesn't work that way. People have to trust on the other side, from the sell side, that you can close. And if you say it, you will act upon it. Not just that you will, but you have the ability to. So that's something people are actually coming to you for, maybe subtly, and they don't realize, but that's part of the value add you're bringing. And finding that deal in Bayonne to quickly step into the other one that you thought you were ready for. I mean, that just shows your experience and understanding. One, you'd already put time and effort in, and you had the right mentality to step away from the deal. And two, instead of fighting for the last $50,000 in the deal on pricing, you guys made a determination, say, listen, this is a good deal. We should move forward right now. We can keep fighting and they'll expose it to the market, and then who knows what'll happen.
Right.
But if we lock it up right now, maybe we could get some help on some other terms and conditions or some closing cost consent, whatever it is that we'll try to negotiate in.
Yeah.
But we can lock this up before it hits the market at a very fair price. Our investor group will earn the returns they need to earn.
Right.
And Bayonne market too, by the way, for if you're not from the immediate area, I could tell you from our side of the business too, is a very attractive area for middle income, and I'd say lower to higher. And now with the Jared Kushners of the world and other people like him who have spent ungodly sums down by the waterfront in Bayonne, the market on the whole has just been increasing and being forced higher by what some other people are doing. And Aaron's group is able to take down a property, take advantage of that trend as well, not just for today, but for the next 3-5 years. He'll be able to benefit from that. And you're paying them for that kind of expertise, whether you realize it or not. You know, that's part of being a good pro, respected pro from the sell side. They know to go to people's capital to be able to close quick, be efficient, and understand that when it's there, they should move.
No, of course. Thank you, Joel. I appreciate that. I really do. You have some kind words there. And no,
you guys are good at this.
Yeah. And I know you guys run a good shop there as well. You're a great lender. I love your brand. You have great colors. You always have also the best imaging at the networking events when you have your sponsor table. It always sticks out very well. So I gotta say I always like that. But I know you guys on the service end are a very good lender. You have good reputation out there. You lend in a lot of states as well. But how can people reach out to you and learn more about how to connect with BRRR loans?
Well, the easiest place is to just go to our website at burr.com. So B with 4 R's.com. You can find us on Instagram at burr.loans. And honestly, a lot of people over the years just call my cell direct at 732-598-0351. We'll answer, call back late at night, weekends, whatever. We're silly enough to stay open at all kinds of hours. We really just committed to what we do, and we love it. And we love to have the opportunity to interact with groups like yourself and work with them. And we look forward to continuing that relationship. And February 21st at the next networking group. And behind that, we're headed to Dallas. And from there, we go to Michigan in late February, which wasn't the smartest play, but that's the way it laid out. So we'll be up in Michigan late in February, hoping it's not snowing too much. But, you know, we're excited to be all over the country, and it's a great opportunity for us. And meeting people everywhere has been an incredible opportunity and experience in my personal life also. So it's great, and we're very blessed. Thank you.
Thanks, Joel. Absolutely. No, you guys run a really good shop there. You have very fair terms, and you know, absolutely, definitely go to BRRR loan 4 R's. I put it in the chat there, BRRRR. And Joel, for our listeners that don't know, what does that stand for?
It's buy, renovate, rent, refinance, and repeat.
There you
That's
go.
the acronym of the small market industry, created on Bigger Pockets. And again, we were fortunate enough to own it, and it exploded. So we were very lucky.
Now, did you start that term, Burr?
No.
No, okay. Because you'd be
We
a
did
legend.
not.
Yeah, you'd be a legend if you did.
No, we didn't. We parlayed it off of the Bigger Pockets platform. Definitely. We got to give credit where credit was due. We were shocked that it was available, to be honest.
I know. I'm actually shocked as well. That's a great website. Yeah, very cool. Excellent. Yeah, Burr is a very popular term in our industry. The buy, renovate, rent, finance, repeat. Yeah, absolutely. I like that. No, it's a good buzzword, and a great company there as well. And I put our link up to our event coming up because I feel like that's a great way for people to connect with us here at People's Capital Group. If you are local, and a lot of our investors are local because they like investing in local real estate here in New Jersey, then check out our event. That's in Somerset. That's going to be February 21st at 6:30 p.m. I put the link up there so you can get a free ticket. We are going to start charging a few bucks for a ticket after February 7th. So if you do want to attend that event, or just put it in your calendar and get possibly a ticket here, jump on that link I put there on Eventbrite here. I put it right in the chat to everyone. And you can go ahead and register your spot for our event. So that's a great way to meet people that are in our network, investors, professionals in and out of the real estate industry. Last time we had about 70 people there. The ticket includes a drink token. And yeah, it was a great event. I think, Joel, you said you're going to be able to make it as well?
Yeah, we're going to show up on the 21st. Yes.
Great. Excellent. So very excited. Yeah, we got a lot of people excited about this one as well. So that's our in-person events. We normally do those on the second Tuesday of the month, but in February, that's Valentine's Day. So we're doing it on third Tuesday. But I put that link in the chat there. I also put Joel's website in the chat to everyone.
Thank you.
So, absolutely. So take a look at that. You can go right to his website, learn more about his lending options there and how to get qualified. And just, I think you have more content on your site too, some different blog posts and things like that. So check that out.
Sure.
And then, but yeah, also our website, peoplescapitalgroup.com is a great place to learn more about how we help people invest in real estate. But the first way to connect with us is generally by watching one of these webinars we just did here, coming to an in-person event, maybe catching our podcast as well that we put out on a weekly basis. But I put that link in the chat though for everyone to click. So be sure to click that link, get registered for our event come February 21st, and then go to Joel's website, learn more about how to leverage your capital and do more deals if you're an active investor. It's how we got started in real estate, working with lenders. It's still how we run our business today, working with lenders, all different types. And it's important to have this relationship in place because capital is a relationship-based business. Even on the lending side, it will help you complete loans. If you have a relationship with Joel, he knows you're a stand-up character. It might even save you a couple bucks on closing costs, but I don't want to get out of my lane.
Yes, we're very fortunate. We have a ton of repeat offenders. So yes, we definitely pay attention to that and help them on transaction costs. Yes, absolutely.
Excellent.
That's fun.
So much. Well, Joel, thank you so much for coming on today. I really enjoyed your time and what you had to say.
Thanks a lot, Aaron. Appreciate you guys having us on with you. We look forward to seeing you on the 21st. And as I like to always say to everybody, to good investing. Have a great afternoon, everybody.
Thanks, Joel. Good day.
All right, bye-bye.